Hi, I'm Jennifer Brown, editor of Canadian Lawyer In-House Magazine, and today I'm here with Ryan Morris of Weirfolds LLP. Today in the Weirfolds quiz, we're talking about tax issues related to the Canada Revenue Agency's Voluntary Disclosure Program. Ryan, is it true that the CRA can no longer assess a taxpayer for noncompliance because the taxation year becomes statute barred?
It depends. In most circumstances, the CRA has 3 or 4 years to issue an assessment, reassessment, or additional assessment, depending on the type of taxpayer. In other circumstances, that period can be extended, generally for a period of 3 years, for example, in the case of a transfer pricing dispute. In other circumstances, the CRA can issue an assessment, reassessment, or additional assessment at any time. For example, if a corporation has failed to deduct and remit employee source deductions or withhold and remit non-resident withholding tax. Furthermore, there's no limitation period where the reassessment relates to a misrepresentation attributable to neglect, carelessness, or willful default, and in the case of fraud.
And is it true that there's no guarantee that a voluntary disclosure will be accepted before making full disclosure?
Well, in a very strict sense, the answer is yes, because the voluntary disclosure program is a purely discretionary relief program. However, if the taxpayer has satisfied all the conditions for making a voluntary disclosure, then they can be confident that it will be accepted and that full penalty relief will be provided. It's a little trickier in the circumstance where there's some uncertainty as to whether the conditions for making a valid voluntary disclosure has been satisfied. In those circumstances, a taxpayer's representative can make a disclosure on a no-names basis and have some no-names discussions with the CRA and to attempt to get some comfort that the disclosure will be accepted despite those uncertainties. And provided that the disclosure is made on a fully named basis and all documentation is provided to the CRA within 90 days of making that initial disclosure, then the disclosure is valid, retroactive from the date of that initial no-names disclosure.
Thanks, Ryan. For this and other issues related to Canada Revenue Agency's disclosure program, please have a look at the December issue of Canadian Lawyer In-House Magazine.